We're joined by Nilesh Shetty of Quantum Advisor joining us this afternoon. Nilesh, hi, good having you. Let me first start off by getting your take on IT, because the last time we spoke, you were bullish with regard to IT. You believed that it was oversold and the selling was overdone. We've seen a 20% upside now. What next? How much of the easy money is made? How much yet to go?
No, I mean, we continue to hold on to our positions. I mean, given the fall, the rally has been sort of not material. I think if you look at the Indian equity basket, perhaps that is one of the few places where valuations look extremely comfortable. Again, it's early days. I mean, there's no denying there'll be a disruption because of AI. But at least our thesis is a lot of that will, a lot of the Indian IT services companies will adapt and capture some of the opportunities that will come because of AI. So we continue to hold on to that position. Like I said, it has rebounded in the month of July, and there is still a long way to go given the scale of correction that has happened there.
Okay, Nilesh, hi, this is Snehi here and good to be speaking with you. What would the house call be on financials within that basket? What are some sub-themes that you're liking the most?
Yeah, so our largest weight remains in financials, but over the last sort of 2 years, it is increasingly moved towards the asset side of the household balance sheet, not the liability side. So we've added insurance names there, both on the life and general insurance side. We continue to hold an asset management company there. Private banks, we're slightly worried about sort of governance in some of the larger banks, where we have become a bit more cautious. But apart from that, our largest weight remains in financials, and especially the insurance basket looks very, very attractive relative to their own long-term history and valuations and where they are trading today.
And Nilesh, just therefore trying to get a sense, what is it that you're finding interesting post the Q1 numbers? Anything changes in terms of a view?
Yeah, I mean, not materially because we tend to have a slightly longer term view when we
Right.
look to allocate. I mean, there are sectors which are getting more interesting, but not deep value because we run a value strategy. Consumer staples have meaningfully corrected over the last 5 years, but still not enough for us to justify adding them to the portfolio. But that's a space we are watching closely. There are some consumer discretionary names which look interesting, but not again attractive enough at the moment. But again, we continue to wait patiently. If they come to our valuation zone, we will be happy to add them to the portfolio.
What exactly are you adding there for, Nilesh?
So it's been a mix of, like I said, an insurance company, a couple of logistics companies, because of the tariff issue, we saw a correction there, and we added them to the portfolio. There is a real estate company that we added first time in the last sort of 20 years. We added a real estate company where we felt governance was reasonable. So I mean, it's been a disparate set of companies, bottom up, which have come to the portfolio.
So, Nilesh, I just want to prod on that realty point that you've been making a little bit more. You know, you've finally come into the realty space after a very long time, like you were mentioning. What's the reason? What's the outlook on the sector? And would you perhaps be adding more names from this sector, given that it seems like there is another cycle in store for real estate?
Yeah, I mean, we've always been very, very cautious in that space because governance is not the best, given how real estate transactions happen in India. And given the promoter's penchant to take money out from the business, we've always sort of been very, very careful. There are probably two names that we would look at investing in. And one of those names actually came within the zone where we thought valuations were discounting sort of liquidation value in that business. So we added that to the portfolio. So there is a long-term macro theme in real estate, no doubt. But to get quality companies at reasonable valuations has not been that easy for us. Fortunately, 3 months ago, we got a company. But again, we don't have a doubt on the fact that real estate will grow in India. It is just the quality of managements that you want to invest in is not that easy.
And Nilesh, I wonder what's the take like on auto, because that was a sector which you were more, or rather trimming exposure to a couple of months ago. Give us the thesis on how this has played out versus what you were penciling in, and what's your expectation on auto going forward?
Yeah, so we had a very large overweight in auto 2 years ago. Since then, the companies have actually done quite well. And as you pointed out, we've been trimming, including the last quarter, we've trimmed our holdings there. We continue to hold a position which is probably half of what we did 2 years ago. It's not, I mean, given the upside that has happened after the GST cut, there will be some moderation that will kick in. But valuations right now are sort of at the upper end of where we would like to invest in these companies. So we continue to trim and wait patiently. If they were to correct, we will happily add them to the portfolio. Apart from that, right now it is our view is it's expensive, that entire bucket.
Nilesh, is the same view, is that the view that you carry for metals as well? Because I understand you've been trimming when it comes to metals and commodities as well.
That's correct. Entire commodity basket actually has benefited over the last 2 years. So commodity companies you want to buy when it's a very stressful time for them. You want to add them at probably one-time price to book or below, and then you want to exit when commodity prices move higher. Otherwise, they tend to end up being value traps. Where optically, it looks that valuations are attractive based on earnings because you're at the upcycle of commodity. So at least our view is you are slightly on the upper side of the commodity upcycle, and valuations are sort of at the upper end of where you would want them to be. And so we've actually exited most of our commodity holdings. We have very negligible holding right now in a steel company, and we wait patiently for them to come to our levels.
And Nilesh, I wonder, therefore, what is it that you're adding? Because if you're trimming large auto exposure and some metal exposure, then of course IT can't be the only thing which is looking like a hold at this point of time. I know you suggested bottom-up stories, but is there a theme that maybe that perhaps that you're looking at?
Not theme, but like I said, we've added an insurance company, we added a real estate company, and we added a couple of logistics companies to the portfolio. So there's no one broad theme, but within sort of sectors, specific pockets became interesting for us, which we added to the portfolio.
Or how are you looking at logistics as a theme to play?
Yeah, in India, logistics has always been a very, very attractive space, but unfortunately,
Correct.
they make very low ROEs. It's
Yes.
not. It's a very heavy capex intensive business. The existing players who have already made large investments and are already sitting on land banks which they can monetize, we tend to prefer that. And one of these companies actually came within a buy limit during the tariff issue, actually in the first wave of tariff, and then we added it to the portfolio where we felt valuations were attractive. And once the DFC sort of at least connects with the JNPT port, you will have an uptick in volume for that player.
Okay. And Nilesh, just wanted your view on some very niche spaces like precision engineering as a sector has been doing well of late. You've got some select specialty chemicals that are doing well. Have you been looking at these sectors? Have you been adding any names from these spaces?
Yeah, again, in a value strategy, unfortunately, they don't appear because their valuations are at the upper end. I know some of these precision engineering companies are based on sort of second order derivatives of the defense story. But again, they traded extremely high valuations. Specialty chemicals space did correct over the last sort of couple of years as sort of inventory supply got adjusted, but not attractive enough. Again, in that space, we are slightly wary because in the chemical space, we're still not extremely confident of the management quality and the governance norms in these companies. And we have very limited view sitting here on what is happening in China and when the capacity there comes online, which tends to have a large impact on global pricing. So we actually had no allocation to both of these buckets.
And last off, just trying to get a sense, Nilesh, would is it at all time for private sector banks, the larger ones, to be looked at afresh, just given the kind of valuation derating they've had and the kind of credit growth that there is, or would margins really bother you?
No, valuations have been attractive for the last 3 years, actually. So we've had very large allocation there. We have 5 banks in the portfolio. But for some reason, the market currently doesn't look at them favorably. And again, the margins are sort of near-term issue. I really don't think it bothers for long. It's a big matter for long-term investors. But for some reason, they are out of favor at the moment. And I don't know when the market suddenly looks at them, but whenever they do, the re-rating can be quite sharp.
Okay, understood. We're going to be watching out for all of these spaces. Nilesh, wonderful to be chatting with you today. Thank you so much for your time.